All right, in business news, the federal government has offered FGN bond valued at $500 million for subscription to interested investors. This according to the Debt Management Office, which says the 5-year domestic FGN dollar bond in 2029 is due in 2029 is at an interest rate of 9.75% per annum. The offer date for is August 19th, while the closing date is August 30th and the settlement is September 6th. The DMO says the bond is offered at $1,000 per unit, subject to minimum subscription of $10,000, 10 units, and in multiples of $1,000 thereafter. It said the dollar-dominated FGN bonds would be listed on the Nigerian Exchange Limited and FMDQ OTC Securities Exchange Limited. Federal government, through the Debt Management Office, announced plans to issue a $500 million local bond to boost dollar liquidity. Minister of Finance, Coordinating Minister of the Economy, Mr. Wale Edu, said the dollar funding was critical for the exchange rate to stabilize. Meanwhile, the federal government says it will begin crude oil sales in Naira to Dangote Refinery and others in October. This is according to the Director of Press and Public Relations, Federal Ministry of Finance and Economic Planning, Mr. Mohammed Banga, in a statement issued in Abuja. He said the inaugural meeting of the implementation of the crude oil sales in Naira committee to fast-track the transaction was presided over by the Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edu. Director of Press said the meeting is a significant step towards ensuring the speedy realization of a presidential directive on crude oil sales in Naira to enhance Nigeria's economic growth and development. He emphasized the need for transparency and directed the technical subcommittee to finalize details as well as prepare a report for the president, confirming that his directives were on track for implementation from September. The Executive Secretary of the Nigerian Shippers Council, Mr. Pius Akuta, is on a tour of facilities in the Northwest. He held key discussions with the Kaduna Shippers Association and the management of the Kaduna Inland Dry Port. TVC News senior business correspondent Ifunaya Eze reports.
Meeting with the Kaduna Shippers Association, concerns were raised about the challenges faced by the Kaduna Inland Dry Port, particularly the need for better rail infrastructure. The group also called for a one-stop shop for exports.
What we have been paying for transporting goods from Lagos to Kaduna here, it has been very outrageous. And by the time we factor it to the goods, it is affecting the cost of the goods here. And once we have this very rail, I know that it will go a long way to reduce the cost of our importation. Mr.
Akuta acknowledged these issues and emphasized the Council's commitment to finding solutions.
We will continue to do everything possible to promote the use of the rail lines. We know that the light gauge, which is lying fallow, almost moribund, there are discussions to see how they can also be revived for the purpose of cargo transportation alone. So that is also in the pipeline. For that discussion is ongoing.
At the Kaduna Inland Dry Port, Mr. Akuta was briefed on their status as a bonded terminal rather than a full-fledged dry port, which complicates operations and increases costs. He responded by highlighting ongoing legislative efforts to address these concerns.
The port stands on about 5 hectares with a warehouse capacity of 4,000 square meters. What this simply means is that on its own we are economics of scale, not to start to talk about the other products that we have, like our cold room, like the lab. So there's a lot to do. We are a port.
It is the directive of the Minister of Marine and Blue Economy that we should quickly work around all the issues that are preventing these infrastructures from achieving their optimal objectives, so that we can see how they begin to function in that light. So we have a duty to go back now and ensure that that bill that is pending before the National Assembly is passed in record time.
The visit concluded with Mr. Akuta reaffirming the Council's dedication to enhancing the infrastructure and operations of the Kaduna Inland Dry Port to boost Nigeria's trade logistics. Ifunanya Eze, TVC News.
Asian stocks scaled on a one-month peak and today tracking a Wall Street rally driven by expectations that the Federal Reserve's could offer further hints of imminent rate cuts later this week. Now, MSCI's broadest index of Asian Pacific shares outside Japan hit a one-month top before giving up some gains to trade 0.23% higher. U.S. stock similarly rose, with S&P 500 futures selling at about, it was 0.02% up, while Nasdaq futures advanced 0.12%. Euro stock 50 futures gained 0.1%, though FTSE futures fell 0.32%. Now in Asia, Japan's Nikkei hits its strongest level in over 2 weeks and latest trading traded higher 1.9%. Chinese blue chips fell 0.7% on continued worries over its gloomy economic outlook. Hong Kong Hang Seng down 0.36%. The People's Bank of China has left the prime rates unchanged after unexpected cuts in July. The PBOC left its key interest rates for 1 year and 5 the 1 year and 5 year unchanged at 3.35% and 3.85% respectively, when China's economy shows sign of modest recovery. The rate cuts were considered premature following the bank's measures to curb a rally in China's bond markets last week. Chinese regulators have been carefully balancing efforts to bolster the economy while avoiding an overheated market reaction. The country is expected to further reduce its benchmark interest rates this year to support economic growth following the global trend on cutting rates and as it reduces the risk of devaluation in the Chinese yuan. General Motors is laying off more than 1,000 employees at its software and service units worldwide after a review of operations following the departure of Executive Vice President of Software and Services, Mr. Mike Abbott, in March, who left due to health reasons. According to reports, half of the cuts are in the United States, with some at the GM's tech campus near Detroit. GM confirmed that layoffs in a statement, saying that we must, according to them, simplify for speed and excellence, make bold choices and prioritize investments that will have the greatest impact. Recall in April 2023 that about 5,000 of his workforce took boycotts to leave the company as it worked to hit a $2 billion cost-cutting target after cutting hundreds of executive levels and salaried jobs in February 2023.